Hey folks, Dan Frio here, the rate update. Today is February 23rd, 2021. We finally had a reversal in mortgage rates to the good. Don't go away. We'll be right back with some great news. Okay, so nobody text me or just put down in the description any lenders you want me to compete my rates against. I'm looking for that for you guys. So to validate some things, to validate that you guys are choosing the lenders that I'm going against. So that's why I'm asking everybody to post it down in the comments below. Give me some lenders, give me a program, give me some specifics on a rate you're looking for me to compare, and I'll do so. Because many people are saying, oh, Dan, you're doing this or doing that. So I want to be completely transparent to show you guys you're picking the lenders and the programs. And so for example, say, hey, Dan, can you compare Wells Fargo? And here's my specific scenario. A 740 credit score. Here's my loan amount. Here's my value of my property. All this stuff and what you're looking to do, so then I can pinpoint it down through and say, okay, here's what they're offering you, here's what I'm offering you, and so forth. What we got in the last probably 48 hours, I got a lot of people freaking out, and I get it. And I told you guys this was going to happen. I said, when we got a reversal in rates, which we're seeing the economy turning. Guys, when the vaccine takes effect and everybody's vaccinated, and the world gets back to normal, you're going to see GDP, employment numbers, everything just taking off in a good way. And it's going to give you more relief. Now you're secure on your job. Now you're this, you're that. But what's going to happen is rates are going to go up. They're so low to help people. Well, when the economy is really cranking, you don't need that much support. It helps us all when mortgage rates are low, but there was a reason for them being pushed so low is to kind of help the economy. Once the economy gets back on track, and then also when inflation starts rearing its ugly head, which it's going to, don't freak out at that point. Be ready. I always tell my kids, make sure you're proactive and not reactive. So hopefully that fits. Got a lot of people building homes, and you're reaching out saying, Dan, my house is going to be done till April, May, June, July. What are rates going to be? I can't afford them at their 4%, 5%, 6%. What I ask everybody to do is please reach out to me. Here's what I'll do for you. I'll put you in our system. I'll get you pre-approved. I'll get everything structured, cleared, and we're going to monitor your rate. Many times what I can do is I can lock you in now. Let's say we're going to lock you in for 120 days or 180 days on a lock. If the rates drop at least 0.5%, I'll re-lock you at no cost to you guys. So that's where I'm at with these things. But I can't help unless you do something now. Don't wait all the way to the end and then you're like, oh, my lender is offering me, a 4% rate with $5,000 in fees, but I got to close in 2 weeks. Ain't gonna work. So I need you to be proactive, not reactive. So what happened in the market today, guys? You like my new technology? I'm getting with the times. Let's get on to what's going on with rates today. So let's get on first of all to the headlines. The headlines kind of say glimmer of hope in bonds, but it might be a trap. I don't think so. I think the market's overreacted, and now they're going to stagnate. Federal Chairman Powell came out today, and it was right here, and I put some of that data on the morning market update with Dan Frio. I put that in this morning, and I think he eased the market's minds. He said, you know what, I see inflation kind of rearing its ugly head right now, but it's not sustainable. That helped the markets and helped the bond markets and the stock market. Because this morning I logged in, I was talking to a couple clients today, I logged in and the stock market's crashing, cryptocurrencies are crashing, and mortgage rates are plummeting or skyrocketing. And I almost just said, I'm going home. It's triple whammy for the day. I'm glad I didn't, because look what happened to mortgage-backed securities. So that's where we're at. So I think my assumption was, and I know, guys, down in here I'm saying, we should stagnate and then we continue to deteriorate. If you have a loan with us and you committed to say, Dan, I'll leave it up to you to lock me in, guys, you're locked. The ones that lost out were those that said, you know what, just make sure you get me the best rate, but I want to know, can I get this? Can I get that? I didn't lock you. And those rates are gone, guys. So you can't stay on the sidelines and just, wait and wait and wait. And then when it spikes, say, oh, I wanted that other rate. Doesn't work that way. So I'm asking a lot of people to go ahead and apply. Let's get you approved. Let me monitor the rates so I can get with you and say, okay, I can get you this rate. I'm going to get you this rate or lower. Is that good? Leave it up to my discretion. As long as you say yes, I'm going to find you dips and I'm going to get you locked in. So that's what's going on with rates right now. So I'm going to rate. If you go through the trends, basically I kept saying, we should be trading in the range of about right here. In my analogy at that time was I thought the Republicans were going to pick up or keep control of the Senate. That didn't happen. And then the $1.9 trillion stimulus plan was there and not there, and now it's there. And then since then you saw this happen because, we're just pumping out money and money and money, and that money has to be funded somehow. And it's funded through U.S. Treasuries, but that also has an effect on mortgage-backed security rates. Okay, so we usually don't monitor the Treasury when the Treasury is trading in a range of 0.4 or that. Now we went from 0.4 about a few months ago to now 1.3. It's about tripled or quadrupled in the last 2 months. That's too fast of an adjustment to this. So it started spooking the markets and it had people moving out of mortgage-backed securities and into treasuries. So now this is starting to stagnate, and now you're seeing people move back into mortgage-backed securities. So I'm thinking we're going to stop right here, and we should come into the range of at least some technicals. Now, are we going to move all the way up to a 103 right here from a 101.25? Maybe not. But if you give me the leeway to lock you in, I'm sure we can still get you in a better position. Let me say it this way. If your rate is 4, and I've had tons of people today emailing me saying, Dan, my rate's 4.25, 4.75, for this, for that. I need to do something now. I don't know where you've been, no disrespect, but take advantage of it now. Again, pigs get fat, hogs get slaughtered. So if we can get you 3 and you're at 4.5, do it. And I work with my YouTubers in regards to rates. You normally get a discounted rate and also very much discounted fees. So I promise you we can take care of you in that area. So this is what's going on with the mortgage-backed securities. The trends are kind of out the door, but where we should be trading should be between this range here. But I basically, I'll say I'm pretty sure we hit the bottom here, meaning mortgage-backed security prices, and we should be moving uptick. Even if we stayed stagnant at this point, I'm happy versus this bloodbath of just things deteriorating. So that's that. What happened during the day? Well, you look at this. It was a wild day. We opened up at 101.34. Hope you can see that. We went all the way down to 100.94. That is a substantial move in the market. And then we came all the way back and closed above where we started today. That is a huge rally. So look at all these green candlesticks right here. Basically, this is telling me there's more buyers. Buyers are stepping into the market. I don't like it ending on the red note, but at least we had candlesticks throughout the afternoon, meaning we had substantial buying in mortgage-backed securities. I love those candlesticks, and I love that progression there. Economic calendar. Look at some of the other stuff that came in. Home prices, out the roof. Consensus was a 9.9. We came in at 10.1. Fantastic. Pricing index, again, way over and above. Here's the nice, exciting thing. Consumer confidence is also increasing. However, the more confidence the system has or the economy has, that means people are going to get back to work, start spending money, all this other stuff. We won't need a stimulus. We won't need historically low, basically zero rates, a zero rate environment. You're going to see rates go up. Now, I think it was too quick, too fast, too everything in regards to all of this. I see us having a pause right now, and I'll take it. That gives you guys an opportunity to jump in now, grab it, adjust your numbers, and move forward before you see even an additional rate increase. market wrap for the day. The one thing I want to point out is Phoenix and San Diego are killing it. Their price appreciation is fantastic. But the one thing I wanted to show you here is mortgage bonds were able to remain above support of the 101.041, and the candle that formed is a hammer. After a downtrend, this is a reliable reversal signal right there, a reversal signal. When we see the hammer in the trending of the charting, these are things I'm not going to explain to you, but this is what I do, guys. Additionally, a move higher in the MBS prices should cause a positive crossover. I'm not going to go through all these technical terms, but so this is basically telling us there should be a reversal in rates. Now, are we going to push all the way back up to here? No. We could, but I see us trending in this range right through here, okay? That's where I'm expecting. So with rates today, we might get another, let's say a quarter reduction on where we are today. So if I talked with you today or emailed you back or did some updates, I told everybody, wait till tomorrow and let me quote you tomorrow because I think we're going to get an ease in rates. Okay, so since you guys didn't give me any information on what you want me to compare rates to, I'm going to give you the national averages. Guys, this is not my rates. This is the national average. What I always say is if your rate is substantially lower than this, be careful. The reason being is I hope you're not getting baited and switched, meaning they promise you this and then Here's the tactic that's used quite a bit. They'll lock in. They'll lock in on a short duration term, knowing that they can't close you in time. Then once you don't close in time, they'll go back to you and say, you were locked for 20 days, but because of this, we couldn't close you. So now we got to either raise your rate or charge you a fee. Nothing you can do about it. Then you're so far in the game, you're like, whatever, just give me what's the fee or whatever, and I'll pay it. I don't do that. If I blow your lock because we're slow, we didn't have our thumb on the pulse and get you through our system quick enough, I'm going to guarantee that rate to you, and I'll eat whatever cost that is. That's my word to you. So we do not bait and switch you, okay? Promise you on that part of it. So if you're being wild, be careful. So when you go through this, you can see the 30-year conforming, jumbo, FHA, and VA. They're not up big in the last couple days, but in the last week, yep. Let me explain this to you. The current rate right now is this. So you got a 3.05, 3.01, 3.06, 2.68. The one-day delta is what's the difference between today and yesterday? Well, 4 basis points. What is a basis point? It's basically 1/100th. So it's 0.0 that. Okay, so in this case, a 7-day delta is where we were last week. Rates are up 0.17 from where we were last week. Okay, 4 is 0.04, 0.02, 0.06, and accordingly. You can see, like over here, the VA, it's up 20 basis points, almost 0.25% in rate. It's big. 4 weeks, you're up 0.2, so we're up almost 0.25% in rate across the board. Well, the good news is last year at this time, we were averaging about 3.8 to 4, and we're still, in the high 2s, low 3s. So this is giving you another chance to get your head out of the sand, be proactive instead of reactive, and get this done, guys. If you're sitting on a 4 rate, get rid of it. Let's refinance you and get you into a lower rate. If you're building, buying, reach out to us because your builder might not do it in time. What's going to happen if they lock you in at 2.75 for a 45-day term and you don't close till June? What's going to happen? Are they going to charge you a ton of money? Are they going to jump your rate? I won't. I'll make sure you're protected. So I'm going to show you at the end of the video how to get a hold of us, how to get your loan in the system so we can get you in, protected, and rate locked so you know what you're getting into. So that's that part of it. Here's my YouTube channel. Guys, I've been trying to do YouTubes live. When I go to Florida, I was at the airport right here. I was home. I just got home last night. My hair was all messed up. I had my sweatsuit on and so forth. Please check out my channel, The Rate Update with Dan Frio. What I started doing about 2-3 weeks ago was the morning update with Dan Frio, and I talk about several things. And what prompted this was I watch a lot of channels myself to keep educated and keep up to date on what's going on in the stock market, cryptocurrencies like Bitcoin. Probably have no idea. If you don't have any idea what's going on with Bitcoin, watch the channel. If you have a 401k or you're trying to find out what I'm going to do with some excess money because I want to retire one day, watch the channel. I go over stocks, cryptocurrencies such as Bitcoin, real estate, rates, trends, everything going on there, and the bond market. I help cover, and I try to make it as generic as I can to educate you guys on terminology, what to look for in the stock market. I'm not telling you what to buy. It's basically an education channel. I'm telling you I'm showing you guys what I'm doing personally. And then do your own research, and you might jump on that bandwagon and say, Dan, like today, I recommended Disney. I don't know what Disney did for the day. My play is when the world opens back up, Disney's going to go nuts, because the theme parks are closed down, the cruise ships are closed down. Once those open back up, I mean, their numbers are still good, but once those open back up, I mean, everybody and their mother's going to go to Disney World that has kids this summer. I talked to I don't know how many people just in the last week. I'm like, what are you doing spring break? Disney. Where are you going to spring break? Disney. Where are you going to spring break? Disney. It's like, well, shit, I'm going to buy Disney. Sorry for my French. Okay, so that's that. How do you get a hold of me? So here's all I want you to do. If you're in the process of building, buying, refinancing, let me know what you're getting. Because if you're not locked in, you're at their mercy. They're going to come back and say, here's your new rate, or here's how much it's going to cost you. Let's get a second opinion, or let me be your first opinion and get you through this process so you know that I do this on a daily basis and you're going to get the best package deal anywhere around. So please go to my channel if you would. Go to therateupdate.com on YouTube. Just Google me. My name is Dan Frio. That's the best way to do it. You'll find all the information you need to know about me. I've been doing this for 33 years and I love doing what I'm doing. But the best way to reach me and my team, go to therateupdate.com. Down at the bottom is our contact information. You can call us at 844-775-LOAN. That's 844-775-5626. Or email me at, holy moly, that's scrolling fast, dfrio@preferredrate.com. Or click here, hit the apply now button if you just want to apply. If you're looking to buy a home, click here, home purchase qualifier. What it does is it walks you through a bunch of questions. Based on the answers to those questions, it helps me pick the exact program for you. Same thing here for the refinance. Down in here is how you get a mortgage quote. We can email you or call you. Your discrepancy here. The one thing I want to pitch out there today is I have a website, creditscoresandmore.com, that I actually created myself. If you guys don't know your credit scores or you're confused in regards to credit, please go to creditscoresandmore.com. This service right here, free credit score. That's if you do nothing, go to this click it there, create an account. It does not cost you a penny. Nothing. And if it does say, hey, you want a VIP service, you want this, don't click anything, don't buy anything. This will give you your credit score, it'll monitor your credit, it'll give you credit repair ideas, it'll help you with credit consulting. It gives you a ton of things. I use this personally. That's why I just made a hyperlink right to the system in this website that I created. So you can go to credit scores, plural, creditscoresandmore.com. If you do anything, click this. Then you can also get your real credit report by clicking step 2. If you need counseling, you click step 3. And if you need identity theft protection, which I got this as well because I get hacked. My credit cards get hacked every couple months. Don't know why, but I use these are the systems that I personally use. Love them. I just wanted to share that information with you. Other than that, God bless you guys. Thank you so much for watching. Please don't forget to give me a thumbs up. Subscribe down below. Click the bell button so every time I post a video, you get an alert. But guys, please leave comments down below. Let me know what you're thinking. Let me know what you want me to talk about. I think on Thursday I'm going to be posting a video debunking the housing crash. And I have realtors and professionals on that video with me to give you our point of view, the people that are in the mortgage business and in the real estate business, on why we are not saying the world's going to end and there's going to be a market crash. So thanks for watching today, February 23rd, 2021. God bless, guys. I'll see you tomorrow. Bye-bye.